Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, January 17th, 2019. In this video, we'll run through various commodity ETNs. This is my watch list of some commodities. Now, a lot of these, as I'll get to, and I've talked about this before, Barclays has a lot of the agricultural commodity ETNs, and for whatever reason, they decided to change all the ticker symbols, retire some of the old ones, which were popular, makes charting a little more difficult. Let me say this. If I were to add any of these as official trade ideas soon, um, I will go through the charts of the futures because that's all commodity ETNs do is they track the futures. And because Barclays changed a lot of those around, very thin. They were thinly traded to begin with, and now you have two of them trading. For example, here's cotton. I'm going to start out here with BAL, and the old one is BALTF. So what happens on the older ones, uh, you're starting to see the volume taper off, as you can see, but you do have more charting history to go by. There's just not enough time in this video. I want to kind of give a big picture overview on commodities because quite a few stand out right now. All right, so let's just look at the chart. So here it is. So again, cotton, BALTF or BAL. You could trade, probably better off trading BAL. Like I said, a lot of these have been delisted now. They trade over the counter, the old ones. So this is a support zone right here. You can see it back here. I kind of boxed in the reactions before, and you had an uptrend line here that was broken. So cotton has been in a nice downtrend, but starting to put in a divergent low as it falls to support. And so, like anything else at all, they all move in cycles. This one's starting to look interesting here. If that happens to break the support zone, your next support's down here with these two parallel lines down at this point. But so we'll keep an eye on that one. And again, after this video, I'll run through the charts of the futures and see if any of these stand out and make the cut for official trade ideas. Next up is cane. Cane is one of a couple different sugar ETNs. We recently had sugar as an official trade. They clipped our stop, of course, and then sugar's been playing out as the charts indicated since. So cane tends to underperform, so I prefer SGG or SGG. TF is the old one. Let me jump over to those so we kind of stay in order here. Here's SGG. This was our official trade. For whatever reason, TC2000's been funky with these. A lot of my trend lines disappearing recently. But there was our stop was at 41.45, so we were hit right here. Right about there, yes, right that candle. So we traded 1 day lower, and then boom, there it goes. So, well, it was, I think, a well-placed stop. In hindsight, they just ran the stop. Whether it was something to do with, these commodities can be volatile. Either way, it is continuing to advance since pretty steady advance, and that's still the target. If anybody took this one and gave it a little extra room, and then when you go back longer in time, SGGFF, you can see the longer term price history there, and this one looks like it's going to head up here at about 25.95 or so, and that's pretty significant resistance. Also looking at potential bottoming plays on a lot of these commodities. Remember, these are commodities. They're not companies. What I mean by that is individual stocks, no matter how good a company is at one point, can go to the wayside, can go, to bankruptcy. There's been great companies that were really high at one point. But the thing about commodities, they don't declare bankruptcy. There's always value. People are always they'll always want and need sugar and coffee and copper and things like that. So although you want to time them right because they don't pay dividends, you don't want to be in a dead money trade. Again, a lot of these look to be bottoming plays. You can see they've been beat down, and I think what we'll probably see is the next leg down in the markets. You'll probably see rotation into these beat down commodities right here. So there's sugar from a longer term perspective. This is a weekly chart on SGGFF, and you can see the divergent low. That's one reason I like that as an official trade recently, and may add it back again. I just don't add futures as act or official trades on the account because of a good majority of retail traders do not have access or the capital or the experience to trade futures. So therefore, we stick with ETNs on the official trades. And again, we're sort of limited on our choice on a lot of these because there's just not many commodity tracking ETNs out there. All right, next up would be corn. All right, corn is the ticker applies CORN, pretty easy to remember. Nice divergent low. You can see bullish divergence down here. Trend line's not perfect. It's not super well defined. We can maybe draw it something along these lines here, maybe get another trend line going like this. I'm just marking this chart up as I do the video here. That's probably a better fit there. But either way, you can see a commodity ETN. That's a weekly chart too, by the way, that appears to be bottoming. So this, I think, I've in recent months done several videos on asset allocation. Commodities are a different asset class. Stocks are one asset class. Bonds or fixed income are another. Real estate. And commodities. And within the commodities arena, you have a lot of variation. You know, corn has nothing to do with copper. And then some of these ETNs have or commodities have an inverse relationship as well. So for example, when the grains go up, cattle usually goes down and livestock usually goes down because that's an input to feed the livestock, one of the biggest costs. So here's corn, CORN daily chart here, and what I'm looking at, I flipped over here. These are all resistance levels, potential targets, but you can see we're setting up in a symmetrical triangle pattern. So what you want to watch is for an upside break of this pattern. You had a divergent low back here, and so far corn has been moving up steadily since that divergent low, but we do need to break above this symmetrical triangle pattern for the next buy signal. And again, as I showed you on the weekly charts, a potential longer term play. But of course, a swing trade opportunity as well. COWTF, this is the livestock total return index. And you can see this one has an uptrend line, which would probably, when you see corn and wheat and some of those other grains break down, break out. If they do break out to the upside, you'll probably see COWTF break to the downside. Again, corn prices start rising. Farmer Brown has to feed his cows and pigs, and that's going to cost him more money. So therefore, you probably see this go down. All right, next one up, cut. I did an extensive video on cut and all the components recently, and it just continues to soar. Again, it was obviously my, as far as the commodity arena goes, my top pick recently. And this one, just to keep in mind, is an ETF because, as I said, there are lumber futures you can trade, random length lumber, but the cut and wood, the two ETFs, they track timber and forestry companies. And so doing good, but again, getting a little extended to this at this point. Getting close to my potential second target. Already took out the first target, and at that point you see quite a bit of resistance comes in. So for those of you that took this one or gave it a little extra room, actually no, we didn't stop out. Just highlighted as a trade idea. So if you took it and you're still in it, keep in mind we're coming up to pretty significant resistance, and that holds true for a lot of the individual stocks, many of which have actually soared, and that's usually the case. That's why I did the video highlighting my top picks, because I would almost assure you if you took the basket of stocks within cut and wood, the top picks I had, average the gains on those, you probably by far outperformed the two ETNs or ETFs, cut and similar one, wood. And obviously the charts look very similar as well. All right, next up would be, let's see where I was, get back to cut, and then next up is DBA. So this is an ETF that holds a myriad of different ag commodities, as you can see here. I haven't updated it recently, but they don't change a whole lot. This was earlier in the year. You can see it's pretty heavily weighted in wheat, corn, and soybeans, and then you have cattle, cocoa, sugar. So this is for those of you that, if I do these videos and your head spins, Randy, it sounds great, but it's too many trade ideas. I can't manage, 24 names in my portfolio, or even a dozen. You want a one-size-fits-all for exposure to the ag commodity sector. This is it right here. And you have a nice downtrend line. In fact, you have a bullish falling wedge pattern here. You can see the downtrend line to watch. Pop over that, especially impulsive, would trigger a buy signal. If you want to confirm it and scrub it, check corn, wheat, soybean. Make sure they're breaking out as well, because collectively they make up, darn near half of this thing right there. So if you see those go up, and of course there is that offset. Like I said, you're diversifying, you're taking a shotgun approach. Yes, as they rise, there's a good chance that cattle and lean hogs may fall, feeder cattle, but this is the bulk of what makes this one up. And again, maybe I'm right on the call on the grains and I'm wrong on the call on the livestock, and that's another way to diversify. So this is a long-term target up here, this downtrend line on DBA. And if we take a look at it longer term, it really seems to be setting up as a bottoming play here. Commodities have just been lagging for many years now, and that will not always be the case. case. As I said, there's intangible value, inherent value in commodities, and there's somewhat of a floor. You can't quantify the floor, but it's not zero like a stock. Any given stock, I don't care if you're talking about Apple. Technically speaking, the floor on that company is zero. It's not going to go to zero today, tomorrow, but 10, 15 years by now it could be. It's in a very fast changing industry, but not the case with commodities. They'll always be around. GAZZFF, one of the worst performing ETNs. It tracks nat gas. Let's not even look at it. JJCTF, this is copper. And I mentioned in the trading room recently, copper is looking interesting as a potential bottoming play. We had a divergent low back here, but this is support. So we have support, support, support. This is a triple bottom. This is a 2-year chart we're looking at. We did break down recently from this symmetrical triangle pattern, but now we've come down to support with, you got it, nice big bullish divergences in place at the lows, just like we had big negative divergence, clean divergences at the high, said get out of copper. At this point, it's telling us, hey, we may have bottomed here. It's a nice low. You might say, well, what if the stock market or the economy is topping now? That's what a lot of people say, and, I think as well. Well, Copper, Dr. Copper used to be the nickname for copper because it did a great job of predicting where the economy would be heading. It's been long stripped of that title. And the copper has been plunging in a bear market when the stock market was rallying to new highs. And it just hasn't traded it that well with stocks. So we have to just treat it or trade it on its own technicals and not try to figure out what the stock market's going to do. And again, it's another way to diversify. Maybe you're right on the call on copper, wrong on the call on the stock market, or I am, for example. And it's just a way to have more diversification in your portfolio by focusing on not just trading stocks or the indexes, but holding bonds, stocks, real estate, various commodities. And you'll have, one portion of your portfolio might be sucking wind for a few months, but these others are firing on all cylinders, and you're doing well. Helps to smooth out the bumps. JJG is a grain ETN. Again, this is one of the newer ones. JJGTF is the older one. We can go back and we can see price history. We can see when I had open active trades on this one before. Simple stuff. I don't want to try to oversimplify it, but that's it. I'll look for a big part of my trading. Let's look for these divergent lows, divergent highs. You go long, bullish falling wedge, breakout, back test, rally, another divergent low, bullish, breakout, back test, rally, and continue to go. That's set up in a bearish rising wedge with, yep, you got it, divergent high, breakdown, and a correction. And now we've come full circle at this point here. We had a divergent low. See the bullish divergence there. It could break this. There's an uptrend line to watch right now. So far, since it put in that divergent low, it's been walking up that uptrend line. But we're in pretty much a ascending triangle pattern right here, bounded by about this 2375 level and this uptrend line. So there's our ascending triangle pattern. If we break down below, then that would mean or could mean that this grain ETN might want to come down and just extend this divergent low, look something like that, undercut or maybe put an equal low there, and then put in a more lasting bottom. However, we already had a divergent low. We're in an uptrend, so we just have to respect to keep it very simple. Let's see which way it breaks. Does it break above this resistance level or down below the support level with conviction? And again, you want to look at the other grains in there as well. If I didn't make mention, this one in JJG, they hold corn, wheat, and soybeans, those three. JJOTF, coffee. Looking pretty good as well. Potential double bottom right here. And remember that the ETNs don't do a perfect job, but they do. Most of them do a pretty good job of tracking the ag commodities. Natural gas ETNs, garbage. Long term, they do a horrible job. But ag commodity ETNs do a pretty good job of tracking, and that's why I have no problem using those as official trades. So that's it. Let's look at the longer term chart of coffee here. And I already hit on this before, didn't I? So we have a potential divergent low. No, I hit on sugar. I'm sorry. I always get those two mixed up because you put sugar in coffee. There it is. So we have a potential divergent low on the weekly chart. And when this one wants to run, it can run. You can see the previous divergent lows here on the weekly chart, some big rips. And that's what we could see here. There's a natural target area about 1667 or so. And let's go back to the daily chart. So we'll watch it here. Let's see, next one up, too thinly traded. That's a soft commodity ETN. Aluminum, too thinly traded. Stay away from that. JO, also coffee. And again, this is the newer ticker, so I can only go back here to early in 2018. There's no price history. That's why I looked at JJOFF to get a better feel of the long-term history. It's hard to apply technical analysis when you don't have enough time or charting history to look at there. Coal, the coal's rallied. This is the coal ETF, and it holds not actual coal, just coal companies related in the coal industry. You have some railroads in there, for example, that move a lot of coal, things like that, other companies. And it's rallied in line with oil because it is obviously a competing energy source. LD, lead, let's skip that one. NIB, cocoa. It's a busy chart here. Let's give you a cleaner board. Let's get even cleaner than that. And actually, no, I'm sorry. Let's go back to what I had here. If you can see down here, I've covered this in the past. I had question marks. Now I can take those question marks away. LS means left shoulder. Head means, head. RS, right shoulder of an inverse head and shoulders pattern. So now let me show you what we're looking at. So number one, we'll go here to this board, all clean. We had a divergent low recently at the lows. That's bullish right here. Boom, boom, and boom. There's your positive divergence at the low. We've moved up. And as I just showed you, and I've highlighted in the past, we have a head and shoulders pattern, which is now fully mature. So as I showed you on that other board, this is your left shoulder here. This is your head. This is your right shoulder. Inverse head and shoulders are bottoming patterns. And the buy signal comes on a break above. This is called your neckline. Let's see if I can draw that out. NL. So you wait for a break of the neckline. In the measured target on an inverse head and shoulders pattern, you take the distance from the head, the farthest point of the head up to the neckline, and you add that to where the pattern breaks out. So it's a pretty powerful measured move there on cocoa if that were to play out. And I know this chart's a busy mess. I've traded this one for years. You can see all these are trades that we've had in the past, both long. This one was a long, mostly long trades on these commodities, but divergent lows, things like that. And there's stop trade parameters. This looks like a short trade here. You had a divergent high, T1, T2, but that next move I'm looking for is is alongside trade. And again, it's another story of a potential bottoming commodity here. When you look back, this is a 10-year chart, and you can see that cocoa prices are coming off at least a decade plus lows. And again, they're not going to go to zero. OILNF, this is a crude oil ETN. Looks just like OIL. We'll get to that in a second. SGG I already covered. I covered that one. SOYB. Don't think I covered this one yet. If I did, my apologies. Sometimes these are not, I have them alphabetical order, but sometimes you have a different ticker symbol on another one. SOYB, this is a soybean fund. There's your divergent low right here. Let me circle that for you. See the positive divergence down below. Positive divergence at the low, and it's walking its way up. And again, if I didn't cover this one, it may have been wheat because they trade a lot of these grains trade very much in line with each other, even though soybean and wheat and corn, I'm not going to say they don't have anything. They are alternative grains, so but they tend to have very similar charts, and they're also part of the same ETN if you want to trade that grain ETN I told you about. So there it is. There's your ascending triangle pattern. Bearish if we have an impulsive break below there. If so, it may want to go on to set it up another divergent low if it makes a run at the lows. So we'll just have to revisit it. Otherwise, an upside break could send it up quite a bit higher. That's SOYB. And UGA, unleaded gas, obviously it's going to track with oil. And just like oil, you had a big, beautiful divergent low, bullish divergent low, and you fell down to a major reaction low back from 2017 here. That one, again, it's already popped quite a bit, and it's come up to a big consolidation area of resistance. I'm near-term neutral right now on gas and oil. I think it's has its work to be done, just like the stock market. UNG, another nat gas ETF. This one does a little bit better than some others, but again, pretty choppy. Let's not even chart's a mess right now. I know quite a few of you in the trading room have been doing a good job on it recently. Kudos to you. I try to sit back and be patient, sort of like the VIX. I try not to force trades. Let this one set up, and right now, I just don't have a strong opinion on nat gas. So let's move on. USO, already talked about that. Nice, beautiful divergent low, very oversold, and now still struggling with that area of recent consolidation there. There you go. And so again, near-term neutral on that, or don't have a strong opinion. WEAT, wheat ETF. This one, you have a divergent low right here. You had a divergent low at this point, a little falling wedge, popped, got a little rally, kind of hit this up, this back tested this trend line right here, fell back down, put in another divergent low. So it seems to me this one's bottoming. Again, this is a 10-year chart now. I believe we're going back about 10 years on this one or close to it. And you can see nice, strong divergences forming on this long-term weekly chart. So it appears like a bottoming play. We don't have any hard or really any strong buy signals yet, but it is one to keep an eye on, again, especially if we start to see momentum coming into these grains. That might be alongside trading up there. Wood I already covered, and that's about it, guys. Yep. So we'll wrap it up here, and I wanted to share these again. If you have any questions on these, if you're in any of these trades, just drop me a line in the trading room, and I'll be glad to mark up a chart on the futures and give you a more detailed, opinion, targets, anything like that. Otherwise, I'll keep an eye on these and can keep some of these under consideration as official trade ideas. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.